Hi traders, this is Terry from Harmonic Forex. So welcome to week 51 of our Forex market preview. Before I begin, I just want to give some thanks for the year 2015. 2 more weeks till the end of the year. This year has been absolutely a blessed year for us in terms of the number of clients that we get, in terms of the number of subscribers that we manage to attract, and number of partners that came forward to work with us. But the one item that I'm really proud of is the number of lives that we have changed through our training program. So going forward next year, we are really motivated. We are motivated to give you guys more great content, to teach you guys more about trading, and to help you guys become better traders in 2016 and beyond. So I really thank you guys for all your support, and I hope that going forward we can see this as a lifetime partnership. We can see this as a community that we cannot live without, so that we continually profit together, continually grow together, and improve as traders together. Okay, so for this week's market preview, what I'm going to cover is a few market indices. I'm going to cover the oil. I'm going to cover gold. I'm going to cover, the most importantly, is the US dollar, because the interest rate decision is coming next week. I cannot guarantee my prediction will be correct, but I will share with you guys my analysis and prediction based on the harmonic trading system, which has many times allowed me to get in together with the insider traders and to profit together with them, even though we are not part of the inner circle of the big market out there. So this is the power of harmonic trading. It's able to spot hidden buying and hidden selling. It's able to allow you to buy low and sell high, to sell high and buy low many times over. And this is a system that has stood the test of time. Over the last 40 years, it has gone through many market cycles, and it has proven to be very effective. Okay, without further ado, just let me go through some of the charts. Just as of Friday's close, which is yesterday, just a few hours ago, the stock market had a huge sell-off. So it's about 400 points sell-off on the S&P 500. This is a harmonic pattern of that we spotted. This is called a Gartley pattern. This is the level that we spotted the market will turn. And as you can see, back in November, it actually challenged this zone, came down, went back up again, and now it's falling again. So this level here at 2000 is very critical. Once this level breaks, this is my prediction on how far it can go. You are really looking at a potential 1000 over pips of drop from the current level. So on Monday, a few things can happen. It can just hover around here, and till the end of the week, the interest rate decisions come out, and the market will either rally or fall. So if I were to take a position on this index, I don't usually trade index, but if I were to bet on a direction, I would bet that the S&P will fall, and potentially it can be a huge fall that can match the China fall in August of this year. Yep. So this is S&P 500. Next up, I want to cover on gold. Gold has been falling ever since. Let's review. Oh man. So ever since 2011, it has been on a free fall, dropping from 1008 now to about $1,000, which is about a 80% drop. Yep. So no matter what, I will still feel that now is not the time to buy gold yet. Any price below 1,000, probably closer to the 900 mark, I'll be looking for opportunities in the higher time frame to long the gold. But at the moment today, I'll be looking for patterns to short the gold, and this is a pattern that I've spotted, which might materialize next week. So if gold rallies up to 1080, which is just $3 away from the close of Friday, I might be looking to sell gold with my stop loss about $100 above, and I will target minimally the 1050 mark. So this will be my risk, and this will be my reward. Easily 1:3 risk to reward on the gold, and Harmonics has proven to work very effectively on gold, and we will see what happens next week, and we'll review again in next week's video. I hope that I will have time to do a video next week, because I will be in Shenzhen 7 days for our first talk in Mandarin ever. So I'm really excited to reach out to the Chinese market, because I think they lack a very good trading system there in China, and I hope that Harmonic Trading will be the #1 trading system by the end of 2017 in China. Yeah. Okay, so this is gold, and if you need to clarify anything that I've said in this video, feel free to mail me. I will include my email below in the description box, and I really welcome your engagement and your questions. Okay. Third one, I want to look at the Nikkei. Okay, Nikkei is an interesting pair to trade. It went to a high of 20810, had a huge fall, and now the price is back to challenge at the previous support, now resistance zone. So next week, if the S&P falls, I will not be surprised to see the Nikkei falling together. This is the critical support at 17,000. If this level breaks, this is where we are gonna see the Nikkei fall to, probably the 16,000 mark. So this is Nikkei, and I'm not sure how many of you guys trade indices, but yep. At the 17 mark, at the 16,000 mark, we have a harmonic pattern completion. So that might be a level for long-term buyers to accumulate their buy. Okay. So no matter what, I'm pretty bearish on the Nikkei. Next week price can do a short rally early week, but once it comes down and it falls below this level here, 18,006, I'll not be surprised to see it fall all the way to about 16,000. Yeah, this is the Nikkei chart. Oh, very nice ABCD structure with Gartley pattern completion. Okay, now back to currency pairs. Sterling dollar next week, interesting pair to trade. So what I foresee is that early week the sterling might strengthen against the dollar, and late week the dollar news is out. So dollar, looking at this case, it might strengthen. Stock market would drop, sterling dollar would drop against the US dollar, based on this harmonic pattern we are trading, which is called the, let me see what pattern is this. It's called, I'll name this the bat pattern. Very nice confluence around 1.5290. So if you are trading this pattern called the bat pattern, I would suggest that you put a sell order at about 1.5290. Stop loss, due to news, I will put a bigger stop loss. So probably I'll risk about 100 pips. I'll put it at about 5390. And potentially this is a trade that can net 1:4 in a very short amount of time. So this is how I'm going to tackle the sterling dollar. Feel free to clarify with me if you need any advice. Last but not least, this is the Kiwi dollar, and next week I will choose to pick the same direction that is going to happen with the sterling dollar. So you might see some early week rally sideways, but once the news comes out, I think it's highly likely that the dollar will strengthen and all these pairs will fall together against the USD. So dollar strengthens, stock market down, currency pairs, anything against the dollar will come down, and a lot of these dollar pairs will strengthen. Okay, oil, no patterns to trade at the moment, but it should move together with the commodity pairs. So it should mean that if the Kiwi, the Aussie dollar, the Canadian dollar drops against the USD, we should see the oil also falling. and do not be too eager to catch a falling knife. That's my advice for you guys. Okay, I'm done for this week. On the 22nd, my guys will be doing a market preview at in Singapore live. So if you're interested and you feel that you benefited from my analysis week to week, and you would like to meet us live, register with the link below in the description box. One last thing before I forget, we have also revamped our signal service now to include our FX book link in the page under Harmonic Forex signal service. So this is to enhance our transparency to our clients. Last week is pretty good, but from November the 1st until today, we are actually down about 2.5% in our account. Every single trade that we put out can be traced here. So what you will see is that we are very strict on our risk management. So most of our trades will not have risk exposure more than 2%, and you can see that the gains are usually more than the losses. This is the strategy that we adopt to be profitable long term. Our hit rate can be pretty low, probably 3 to 4 out of 10 correct, but those correct trades that we take is enough to cover up for the losses and give us a long term profitability for our clients. So if you are interested in a very transparent signal service, I will highly suggest that you go to our website harmonicforex.com, go under learn more about HSS, and subscribe for the signal service. The first month is free of charge. We'll give out 3 to 5 signals a week, and going forward in January, we will charge only about $40 US per month, and there's no lock-in period. If you think that it's not suitable for you after a month, feel free to terminate. Yep. Thank you very much for watching this video this week. I'm very happy to host you guys and to share with you guys my knowledge. So my team and I, we look forward to do more for you guys every single year, every single month, and we hope that you can see our sincerity in sharing our knowledge. And thank you so much. I hope that the last 2 weeks of 2015 will be fantastic for you, and I will see you guys again and talk to you guys again next week. Thank you.